What's up, world? I'm back and I'm here to talk about what a market cap is. If you haven't realized by now, I use the sunglasses to determine which video is which when I'm uploading, and that's why I'm always switching my sunglasses. But let's talk the market cap of a company. The market cap is the total amount of outstanding shares, the price of the total amount of outstanding shares combined. The hell are you talking about, Nick? Okay, this is what I'm talking about. If you look up the stock price of any stock or any company that's publicly traded, let's say like Disney or GE, that stock has a price, right? So let's say the price of that stock is $30. Let's keep it simple so we can do simple math. Let's say it's $100 a share, $100 for one stock. And there's a million of those stocks out there. That means the market cap of that company is 100 million, right? $100 times 1 million stock. Or let's say that there was a penny stock out there, and there's the price of the penny stock is $1, and they have a million shares out there floating around that you can buy and sell, right? If you have $1 million, and if there's 1 million shares outstanding and you have $1 a share, that means the total market cap is $1 million. That means if you had $1 million, you can buy all the outstanding shares and own the company essentially. This doesn't happen for various reasons, supply and demand being one of them, because as soon as you try to buy the whole amount, the price starts going up. So as you know, stock tickers go up and down. But why is it important to understand the market cap of a company? It's important to understand the market cap of a company because this is the total value of that entity. So a lot of you guys that follow me on microcapcompany.com are really interested in penny stocks, microcap companies, small cap companies. These are companies that have a smaller market cap. So, for example, Amazon, a GE, Chase Manhattan Bank, these companies are worth billions of dollars, right? So that means the market cap, the price of one share times how many shares there are out there, is in the billions. So if you wanted to buy JP Morgan, or if you wanted to buy Google, or if you wanted to buy Amazon, you'd need billions of dollars to buy all that stock, and then you'd be the owner. In a micro cap company or a smaller cap company, right, the market cap is smaller. Meaning that doesn't mean the price is cheaper. You can still have $100 a share, $1,000 a share, right, and only have 100 shares outstanding, or 1,000 shares outstanding, which would still make your market cap under $1 million, right? The amount of shares outstanding multiplied by the price of the actual stock. Again, why is this important? Because when you're looking at a stock investment, it's more than the price. You don't care about the price. You care about the value of the whole entity. So the price of the stock is really irrelevant. It matters how much is the whole company worth. So if you look at the balance sheet of a company or the revenues of a company, and you determine that they have more on their balance sheet, they have cash, they have 100 million in cash, right? And they have no debt, and they have no other outstanding operation, but they got 100 million in cash. But the stock today, there's a million shares trading at $1 each. That means you could buy that whole company for $1 million, right? $1 times a million outstanding shares. You buy that whole company for $1 million, and they're sitting on $100 million. So that purchase of the shares is more valuable, right? You're only spending $1 million to buy $100 million in assets or cash. Now, this is an extreme situation, right? Most companies have businesses, expenses, and so on and so forth. So, but the financial formula is pretty much the same in any business. It's what you have minus what you owe. And then you can factor in, of course, the future potential earnings of the company, which are already factored into a lot of these companies. But to understand this, you have to understand what the market cap of the company is, right? Which is, what is the total value of the company if I wanted to buy out all the stock in that company. This is an important valuation when buying any stocks. Just for your own investments, it's important when you're talking about reverse mergers or mergers and acquisitions. This is when you're looking to or a reverse IPO, or PIPE deals, or private equity deals where you can buy a public company if you're a private company. So if you're a private company, you can buy a McDonald's if you had enough money, right, and take it right off the stock exchange. Say, I'm gonna put this in my portfolio as an investment. I own it all. But you have to understand, you have to buy out every stock that's outstanding, and that is the market cap number. Okay, so that's the market cap of a company. Make sure you understand this. You don't care as much about the stock prices. You care what's the total entity value, And then what does it have in there? Does it have assets? Does it have revenue? Does it have cash? How much debt does it have in there? Is there a ticking time bomb that says, that they're going to owe somebody money in 5 years or 3 years or 1 year or 1 month? Um, this is important. So I'm going to try to go down all the things that you need to read a stock ticker. So if you go on Google Finance, you'll see this on top of any stock ticker. It'll say market cap. And if you multiply the price of shares outstanding, which is also in those little columns, by the current price today, that'll give you the total value of the company. So that's what market cap is, guys. Join us for our next episode. We're going to talk about, let's talk about volume on our next episode. And subscribe to the page. Make a comment underneath if you want to add to the conversation, or if you want to correct me on anything, or if you just want to suggest our next topic. So that's market cap. We'll talk again soon, guys.